According to the University of California, less than 1% of day traders make money. That's right, over 99% of day traders lose money over time. So instead of wasting time with that fool's game, in this episode, I'm going to give you 5 steps to stop wasting time with day trading and trade in a way that just might give you more than a 1% chance of success. So last year, the University of California put out this study called Do Day Traders Rationally Learn About Their Ability? And the abstract basically summarizes and says that the vast majority of day traders are unprofitable and many persist despite extensive losses. And this was done in Taiwan from 92 to 2006. And you might be saying, well, Chris, this is done in Taiwan many years ago and it's different from the markets today. And I would actually agree with that, but I would say that day trading in today's market, even in the US or Europe or any really established financial markets, day trading today is even more competitive than it was back then. But let's dive in and look at some of these stats. So let's scroll down and I'll show you just a couple of stats here. The most important one being that a small subset of day traders, meaning less than 1% of the day trading population, predictably earns profits. And I'll link this up in the show notes if you want to read the whole thing, but just a couple more stats here. Says that 80% of active traders quit within 2 years. So 4 out of 5 people gave up after 2 years and only 7% remained after 7 years. But those 7% aren't necessarily profitable because traders with up to a 10-year negative track record will continue to trade. So people will continue to lose for a decade before giving up. And Wall Street doesn't want you to know this. Why not? Well, there are some huge conflicts of interest out there. The biggest being that brokers and exchanges make money every time you place buy or sell. Anytime you make a trade, they get paid a commission, or even these no-fee brokers like Robinhood that come out and say, we're not going to charge commissions. They're front-running your orders, okay? So you're actually paying a worse price than you would if you paid a commission. So they're screwing small traders and investors, but people just don't know that because they pay attention to the marketing. So I think a much better goal than day trading is to try to catch the biggest price moves on a percentage basis with the least amount of trades. So literally my motto is trade less, profit more. Now, why is that the case? Well, in addition to getting the bigger percentage gains with fewer trades, meaning less transaction costs, you're going to have fewer opportunities for mistakes, either mental mistakes or technical mistakes, right? And as humans, the more opportunities you have to screw something up, the higher the probability is that you're going to make mistakes and miss out on a big trade. And several months ago, I wrote this blog post called Why You Shouldn't Trade for Income and Do These 5 Steps Instead. And so in this episode, I'll recap these 5 steps. But in addition to these studies that are coming out that basically proves that you should not day trade anymore, I have some personal experiences with this. So I've been obsessed with financial markets since high school, and I spent many years actually day trading. I had some good years, I had some bad years, but I just want to show you kind of the evolution of the markets and what I've learned over the years. And one thing that I talk about in this blog post that I'll link up in the show notes is how market conditions, competition, and technology always kill profitable trading strategies. So what that means is like what worked yesterday or today is probably not going to work a year from now because the markets are always evolving. And just to give you a little bit of history and some of the stories that I talk about in this blog post, in the late 90s, I had a mentor who was a day trader. This is before stocks were on the decimal system. They were on the fraction system, and he would sit there and he would scalp all day, every day. And he made a full-time income just scalping stocks. And that worked great until the markets became more competitive, right? When they went to the decimal system and stocks started trading in pennies, his margin, his profit margin got crushed, right? And then came futures contracts, and you had high-speed internet connections where people could trade from their homes, and you had really volatile markets. And so that was a great strategy for a long time until it wasn't, because what happened is high-frequency algorithms started dominating market movement and trading volume, and that just pushed out individual traders. So now that we know that day trading is incredibly competitive and the odds of failure are so incredibly high, let's talk about 5 steps for effective trading and investing. And the first step is to develop technical and mental skills now. Right? Like, invest time and energy in learning about technical analysis, fundamental analysis, develop the mindset of a disciplined, confident trader. And then the second step is create non-market related income streams. I think the most dangerous thing in trading is if you try to rely on the markets for a paycheck, right? Like, if you're working for Goldman Sachs, or if you're working for a big trading firm and they're paying you a salary plus bonuses, that's different. I'm talking to the guy or lady that's sitting at home and you're looking to trade your own capital, and you're like, hey, I want to grow my wealth. And I've heard people talk about like creating income through trading. I think it's really, really dangerous, especially if you need to make money to go into the markets and try to make an income from that right away, right? Like, if the stars align and we have perfect market conditions, maybe, but I think it's so much easier to create non-market related income streams and then use that capital, risk capital, money that you can afford to lose in the markets, and then put that to work. Where if you're like, hey, I have $5,000 and I'm like, I can't really lose this money, but I want to try to become a millionaire with that, your odds of failure, again, just like that study proved, are 99% or more, right? So the third step is, after you've developed your skills, if you have a comfortable financial situation where you have non-trading related income, then wait for high probability, meaning the odds of a trade or an investment working are higher than 50%, and a high reward to risk ratio scenario where you have asymmetric risk to reward, where if you're risking, say, $1,000, you have a profit target of $5,000, right? Where, again, think of it like a casino where the odds of winning are higher than a coin flip. And if you win, you're going to win more over time on average than your losses, right? Because the goal in trading and investing is not to win every trade. You can never do that. There's no trader in the history of humanity that's done that. But the only thing that you can control is your edge, right? Looking for market conditions where you have an edge. And in my next video that I'm going to publish in a few days, I'm going to talk about how to develop that, or how to find that. But that's the third step. And then the fourth step is, when those opportunities come along, which they're few and far between, they don't happen every day, but when they do come along, strike when there's low-hanging fruit. Be prepared, right? Be okay with developing your skills now and then being patient and waiting for those big opportunities when they do come along. Case in point, Bitcoin 2015 at $200, or stock market 2009 or 2008 going into 2009 when everybody was bearish, right? You have these opportunities in history. Sometimes they come along on a every few weeks, every few months, maybe every couple of years, or maybe once in a lifetime. But just be prepared for those, because you don't have to have home runs or grand slams every day. Like, it only takes one trade or 1 year's worth of trading to make a career's worth of profits, right? And I've just, in knowing and speaking to so many career traders and investors, that is more common than you would think. People that are highly skilled that sometimes will have dry spells for several years where there's really just not much opportunity in the market, and then all of a sudden they have 1 year where they made more money in the past 10 years. Like, that's more common through my experience, in personally and talking to other good traders and investors. So strike when the iron's hot, get that low-hanging fruit, And then stop trading when market conditions are no longer favorable. When you lose your edge, when volatility falls, like the first half or more of 2018, I haven't been trading much in Bitcoin because the volatility has been shrinking, right? I got to know when to pull out and when to slam on the brakes and when to push the gas, right? So stop trading and get the hell out of there when you lose your edge, because you will. Like, read the blog post talking about how technology and market conditions always kill profitable trading strategies. It's just a natural progression of the markets. And I'll leave you with this last point, which is the number one reason why traders and investors fail is their mental game. Okay. When it comes to trading and investing, technical analysis is relatively simple, right? You don't have to spend years and years and years learning about every charting tool under the sun. You don't have to learn about every theory, every way to quantify price. That's relatively simple. The thing that actually crushes a lot of people is their emotional game, right? Or their lack of mental strength, hesitation, greed, fear, overconfidence, right? These are all things that if you've never had real money on the line before, you don't really know how you're going to react. And that's why I always tell my friends, I'm like, hey, if you want to figure out who you really are, then trade the markets, because you can't hide from that stuff. Like, it comes out. And you might think you're disciplined. You might think you're, real strong and you have a big ego and you're a go-getter and all that. But the markets will humble you. And if you don't take the time to really understand your mental game and understand how to control it and develop a plan and develop confidence the right way, you will be in that 99% or more of people that lose money over time. All right. And so what I've done, I actually put together a trader checklist and a mental strength quiz where you can take this quiz and find out, are you a disciplined trader? Are you an emotional trader? Or are you a compulsive trader? Are you a gambler, right? And along with that quiz, I actually spent several months working on this manifesto called The Ultimate Checklist to Becoming a Confident, Disciplined Trader and Investor. And I really give like 15 ways where you can overcome these negative emotions, also how to create a rock solid trading plan, and really get your mental game on lock. So I'm going to link that in the description or the show notes, or if you're watching it here on YouTube, you can go ahead and click right here and you'll take that quiz and get that PDF download. So I hope this video was helpful, guys. I really just want to help people focus on the things that can really give them a competitive edge. So like it up, share it with anybody that you think would get value from it, and I'll see you next time. Take care.